Hi, my name is Travis, and I'm from Asia Wealth Management Services.
I'm Danusha Pathirana from Asia Wealth Management Services.
And we're here to give you a basic overview of the research report on the country which we recently produced, which is called Country Report 2012. This was done by Asia Wealth Management Services, and under this we basically did a general overview of the economic climate of Sri Lanka, and to deal with this we mainly touched on four broad areas, that is the real sector, the fiscal sector, the monetary sector, as well as the external sector. Then we went on to show how, based on our expectation, what will be the implications for the equity market and the performance of individual sectors. So to start off, I'll be covering the real sector as well as the fiscal sector. So if you look at the real sector, basically, in the report, what we were trying to highlight was if you're talking about agriculture, the relevance of agriculture in a post-war development context, and how through its backward linkages with industry, how it contributes towards growth. Then we moved on to the prospects for some of the traditional sectors, and what are the changing trends we've observed there. Then we also mainly focused a lot on the construction boom and the government's intention for a development-led boom, and how this would have wider implications in terms of for example, the fiscal deficit, and what would be the long-term implications of that. Then we also touched on a number of other things, such as like power and energy. The government has an intention to move towards more sustainable forms of energy, and also especially one of the areas in which the peace dividend the effect has been widely seen and has been discussed widely in the media, is in tourism, and so we've seen what is the long-term implications of that. Then moving on to the fiscal sector, we give you a basic overview of the government budget and the structure of it. For example, the composition of taxation, whether it's direct or indirect taxation, as well as the expenditure, what are the main recurrent and the capital expenditure. And so for that we have discussed the government budget targets for 2011 and 2012, and seen how successful the government has been in achieving these targets. And then finally, after that, we went on to show some of the current issues which would have implications for the fiscal position of the country, which is mainly the IMF intervention. So what would be the effects in the short run, as well as the long-term structural implications, as well as some issues like the oil price increases and some of the current external issues which is currently facing the country. And so with that, I hand it over to Danusha.
Thank you, Travis. Well, basically, I focused on the monetary sector and the external sector, and also other structural aspects, which is well, we believe that are key components that sort of structure the investment pattern in the Sri Lankan economy, which we believe is an important aspect when it comes to dealing with the external and the monetary sector variables movement. And well, on the quantitative side of these two sectors, we've been talking about the impact and the future expectations on the changes which we expect on the monetary sector variables, such as the recent change in the monetary policy of the central bank, and how it would impact the key monetary sector variables like the interest rates, exchange rates, and then what sort of a investment climate that we could expect given that these changes have now taken place. So, well, if I move on to the basic changes that we've been studying in this sense. Now, specifically the quantitative limits which the central bank has imposed on the banking sector credit growth, and the policy rates hikes, and turning on to a flexible exchange rate from a managed exchange rate regime. Now, we think this tendency, this move has a tendency to automatically prevent any balance of payments issues but there are also forces that are outside, quite outside the sphere of, quite outside the control of the central bank, which actually has the potential to go against that. Now, for example, the inelasticity factor, or the inelasticity factor that is prevalent in the external trade, now imports and exports. So how whether the exchange rate that is managed by the market forces have a tendency to increase our exports and reduce our imports. So these things are being talked about, and whether, for example, how the regional exchange rate changes, like our main trade partners like India, Singapore, and China, who account for nearly 50% of our imports, and the changes in their exchange rates, how that could impact the overall trade balances. So rather than, because for example now, if you take the case of India, now during the last few months, the Indian currency have been depreciating about 25% against the greenback. So that would mean the Indian exports to the country would be cheaper, despite the fact that our rupee is falling. So then we have to consider whether the depreciating LKR would have would bring about the expected results as such. So, and then moving on to the growth of exports, how the exchange rate and interest rate changes would impact the export sector. So, and considering on the structure of our exports, now that we believe that they are largely price inelastic. So the dollar income which is expected out of the exports would be not really increase as such due to any exchange rate changes, because the price inelasticity aspect of our exports, for example like tea, that the reduction in prices would not necessarily cause the foreign buyers to buy more. So these type of aspects that we have dealt with the external sector and the monetary sector, and then later on in the report we've been touching on the structural aspects which contribute to the growth of services sector as opposed to the manufacturing in the economy. So, and what aspects that are driving, that are actually, let me say that how the aspects which help to channel the resources into services as opposed to the expanding manufacturing sector. So these things have been looked upon, and yeah, that's what we could expect from it. So with that, we round up the brief overview we've been going ahead with on the country report. Thank you very much.
Thank you.